All right, big week ahead for mega cap tech, as you know. We're going to start earnings on the 29th. Meta and Microsoft are going to report that day.
In this video, the fast money traders examine the market dynamics, noting the dominance of the mega cap 7 tech stocks and their disproportionate earnings multiples compared to the industrial sector, despite skepticism about the sustainability of their growth rates. Overall, there's a caution optimistic about tech's role in portfolios during earnings seasons, with a potential emerging interest in industrials due to favorable market conditions linked to the America First agenda.
You get a lot of this news about AI initiatives in the White House. Yesterday, the numbers, NVIDIA's up 4, Microsoft is up 4. I mean, the Oracle has had a huge week. So a lot of this is getting pumped in, and I think as we take a look back, these names, they need to be in portfolios, and if you want to outperform the S&P, you have to still hold these, but it's how you rotate and how you manage it as things go.
All right, Josh, how should we think about these names heading into a really critical earnings season here?
Look, these stocks, every time we think there's going to be some sort of a move out of these stocks in size, maybe you get one or two of these names fall like an Apple or a Tesla recently, but as a theme, they just continue to be bid. And I think it's like not an accident that we've seen this internal rotation amongst the Mag 7, or if you want to broaden that out, like the biggest 20 technology companies. Throw like ServiceNow in there, which looks unbelievable. Alphabet looks great again. And, you know, maybe that's money that's rotating out of the Teslas of the world. Or maybe it's just people continuing to feel good about their purchases in these stocks because they give you the ability to play both offense and defense. Alphabet's got an RSI of 64 right now. It's above its 50-day. It's above its 200-day. It's up 6% on the year. You see people saying, all right, maybe this is the time I want to own a cheaper of the Mag 7. So I'm going to buy Alphabet, 26 times trailing PE versus Apple, you know, closer to 40. So you're going to see a lot of that go on during the course of this year. It's been happening over the last 2 years. Don't be shocked by it. I also think Amazon looks great for the same reason. Not one of the cheaper names in the group, but one of the names people are really excited about for 2025.
Wolf Research says they expect continued tech dominance this earnings season. I mean, the elephant in the room, frankly, is Apple, which has gotten a bunch of downgrades lately, as you know. It's having its worst month since December of 22. It was the largest market cap company in the world until recently, eclipsed by NVIDIA a day or so ago. Now in danger of dropping to number 3 behind Microsoft because of the recent troubles. Right on cue, Dan Ives is defending Apple today, as you might expect, says fear's overdone. A China turnaround is in the cards. Morgan Stanley's Eric Woodring is hesitant to call earnings season a, quote, clearing event, though he also doesn't believe there's reason to get tactically bullish around earnings either. Bill, how do you think about Apple going in? It's the one maybe with the most to prove, I think, at this point.
Yeah, now again, this is a name I'm actually looking at right now. We trimmed it, and I think when it falls out of love, that's when you have to get Apple on your radar. And right here, I think there's a lot of support. Yes, the iPhone 16 cycles may be disappointed, but at the same time, I think when those disappointments start making it, you know, front page news and driving the stock lower, that's when you have to think about adding it here. And I'm glad we're not seeing Apple trading 250 plus going into earnings. It gives it room to beat and maybe respond.
I want to talk about when they say dominance, when Wolf Research says dominance on these. Like, I would love to hear them define that, because dominance in 2024 meant the following. It meant the top 10 stocks in the S&P that included these 7 were up 48%. All the rest, the other 490 in the market, were up 10%. Do they think dominance means 50% versus 10%? Or, to our broadening conversation, does it narrow dramatically? And I think
dramatically?
Dramatically.
You think it's going to narrow dramatically?
Dramatically. I don't see how that dominance continues that magnitude of divergence.
What? No. Why does it have to be of that magnitude? You just said dramatically.
Yeah, I think
insinuating that what was 48 to 10 is somehow going to be, 15 to 13.
Yeah. Doesn't that seem more reasonable?
No, actually it doesn't.
Okay, I'll tell you why I think it does. So I think it does seem more reasonable for the following reasons. One, if we look at the S&P collectively, so let's look at them together, those 7 plus a couple others, plus like Berkshire, JP Morgan, they make up almost 40% of the S&P. You can go back 50 years. There's never been a time where such a small collection of companies has dominated that much market share. You can go back to the 70s and look at the Nifty 50. 50 stocks only made up 50%. So there's no precedent for this kind of concentration. Then you take that and you couple it up with the conversation that we were having about industrials. And you look at things like Apple, or frankly like Microsoft. So you've got Microsoft trading at 31.5 times earnings. And when you look at their earnings growth, it's lovely. It's 10% next year, it's 15% next year, it's 18% the year after that. But you look at industrials, they're in that other 490, and you're like, okay, they're trading at 10 multiple points lower, and they've got collectively 19% earnings
Gross
growth.
margins are the puzzle piece
like,
you're missing. You have the whole puzzle. You're missing one piece. It's on the floor under the couch. Gross margins are the single biggest determinant on whether or not this type of outperformance can continue to the extent that it has. A company like a ServiceNow has margins that no industrial in their wildest dreams will ever get to. Wait, which is why, rightly or wrongly, investors continue to bid stocks like that up. I'm just looking, I have 3 non-Mag 7 tech stocks right now. And you can't tell, and I have industrials too, Jenny, you can't tell me any of the industrials will ever have the gross margins that these companies have, and that's why people are paying up for them.
But Josh,
I've read it. I have CrowdStrike, and I have Samsara,
but
IoT.
Here's the thing. There's a very, very important nuance. You said that people are paying up.
Well, I was about to tell you the degree to which they're paying up.
Okay, I would argue that they have paid up, right? They've pulled it forward.
And what happens?
So
these companies come out with 20, 30, 40% earnings growth.
No, but they're not.
No,
but they're coming out with like 50.
You're talking about the ones you follow. I'm talking about names that you don't even know the tickers of.
Oh no, you're proving.
You're saying
my point.
Microsoft.
You are proving my point.
How so?
You're proving my point because the ones that I've never even heard of aren't in the top 10.
Yes.
So we're talking about mega cap tech.
CrowdStrike's pretty big.
How big's CrowdStrike compared to the $3 trillion market cap?
It's not a trillion, but it's not 10 billion.
You think it's going to triple? And like actually give Apple and Microsoft a run for?
Well, let me say it this way.
You're literally proving my point.
Let me say it this.
That's in the other 490.
Let me say my point is that these earnings from the big tech companies, they're going to be great, they're going to be solid, but at the same time, these industrial companies may not even have as good as earnings, but the America First agenda that we're seeing and talking about this week is going to create the flows that's going to help these industrials outperform in the next couple of months.
Good point. So, okay, but let me put you...
Dominance is what percentage of the S&P 500's earnings are coming from industrials versus what percent are coming from not just Mag 7, semis, software. It's like, it's night and day.
But
so you could be bullish on both, but dominance, according to Wolf Research, is probably still the right call.
But what magnitude of dominance? But let me ask you this. So when I'm arguing
I'll tell you in December. I don't know.
Okay, but Josh...
This is the last quick point, okay?
So the question is, do you really think that Mag 7 will be up 50% in 2025?
No.
There you go.
Okay.
What'd you win? I don't understand.
No, it's just, it's not going to be that level.
All right. We're going to have to leave it there.